China. All right, here there is a really wide divergence of opinion, and China's kind of important. It's particularly important to commodity producers like West African minerals because it is the principal determinant of the price of iron ore and the price of many other commodities. China has moved from a unparalleled growth in the human history situation to a lower rate of growth. And for sure, China's growth is going to fall from 8% on average down to 6 or 7% over the next, say, 10 years. But it is still going to grow, and China remains less capital intensive than other major economies. It's about 15% the level of capital intensity per head of Japan or the United States, for instance. And while the capital has been misallocated in the last 10 years, leading to loan issues, particularly at the local government level and in the state-owned enterprises, I think they are resolvable. China will sort of muddle through. But it is a fact, ladies and gentlemen, that in the last 10 years, China's nominal GDP has quadrupled. It's gone up 4 times. But the stock market has gone nowhere. And all these guys who are big balls on China, I can't remember the name of the guy, but the one who was at Fidelity and went off to Hong Kong to seek his fortune, have got it wrong. Why is that? It's because China is corrupt. The companies are generally state-controlled. There's a lot of leakage of profits outside of the companies that you've originally invested in. And there's a lot of outright fraud, Sino-Forest being a good example of that. Now, would I buy China now? The answer is I would probably dip my toe into the water. There's a famous American short guy called Jim Mellon, a very, very bright man. He's ridiculously short of China, but I would take the counter view. I'd say it is the world's second largest economy. It will be the world's largest economy at some time this century. We should probably have some exposure to it. They will start to get their corporate governance together, so let's buy a little bit of China, but not too much, 1 or 2% in your portfolio now. That significantly underrepresents the size of the Chinese economy in terms of portfolio allocation. It's a recovery play. The market is cheap, but it's cheap for a reason, as I just said. These are the stocks, and if you're interested, get the copy of the emails, of the slides rather, on email afterwards, and take a look at the stocks in more detail.